Hello, welcome everyone. From time to time, I'm asked to divulge the performances of Algo 17. First and foremost, Algo 17 is a program that allows individual users to build their own strategies. We don't really sell any strategies, so I'm not selling a system to anybody. What I'm selling is the back end to program your own system. Now, to help our clients, what we've done in the past is we provide models for them that they can maintain and structurally change when market criteria change. What would be a market criteria that could change? One, ATR, average true range. Markets fluctuate in periods of volatility. Now, for the E-mini S&P, for example, the 5-year average, that's 5-year average, is about 30 points right now on a day-to-day basis. However, since the December crash of 2018, we shot up on the 10-day ATR to 89 points. In March of 2020, we shot up to a record 248 points per day on a 10-day average true range reading in the E-mini S&P 500. So obviously, well away from the daily average of the last 5 years of around 30 S&P points. Currently, we are sitting here, and one of our models is, this is a day trade model that you see in our live trading room. This is the Spider model. This is an SPXL. We have a VIX. We have an SQQQ, a 5-minute crude oil, a British pound, a gold, and then we have the special Amazon chart over here for a different reason. But this is what we project in our live trading room day in and day out. On Friday, the market, our volatility market, VXX, did initiate a short. SPYs initiated a long, and they're still long, and so is the SPXL. All right, so now that that's out of the way, what does this model down here signify? The advanced decline right here is showing the S&P 500, but it's this right there is up for a 5-minute basis. This is the average true range in the S&P 500. 4.57 points. So we take a look at average true range and a lot of different variables that go into trading and systems. When you see an increase in average true range, and for example, on Friday, the market had an ATR, a 7-period average true range in the E-mini S&Ps of over 12 points. 12 points. Now we're back down to 4.5. So obviously, in a 12-point range where every 5-minute bar is moving about 12 points, that's $600 per one contract, a system that works in a 5-point probably won't work as well. It's either going to have more risk or get stopped out prematurely. So you have to be able to adjust for changes in volatility. And that's one of the variables, as I was discussing. So how good are our indicators, or at least the Algo 17 that we use in the live trading room? For that, let's turn to this next page real quick. All right, this is one of the models that we created a class for January of 2020. In fact, everyone, and this is what's called the, you can see it down at the bottom, so I wanted to make sure that you all see this. This is called the Razor Focus, and this is one of the models that we actually use for J-Person Asset Management. So when someone asks, well, what are the models that you're using? We use a variation of this model in the live trading room. And as you can see, it is currently long a position right now, same as the live trading room. This has a little bit different functionality as far as its maximum bars that it holds and its profit-taking capabilities. So the Razor Focus, this is called the Razor Focus. These are one of the models that when someone purchases the Algo 17, we supply them with a model in the S&P 500 similar to this. Now, I do not give out the criterias and the settings for this exact model, and here's why. People paid for this class, and they got this workspace on the Razor Focus class. I'll get to that in just a minute. So this is the performance summary from the backtest purposes, and this is the performance summary since we created the trade. Let's take a look at the details. All right, so here we have a monthly periodic return from, again, great backtest what did it do after the back test? So that's the real question, right? So if you're looking at what is the performance on one of the models that we have in the S&P 500 in this year, that would include February's end of month rally, that would include March's debacle, and as you can see, this is when we gave the product out. So let's look at the starting point from January. This is as we created the model, hindsight, so to speak. As we gave the product out live, this was actual real trading, all right? And a lot of real trading has to do with the signals that we take in J-Person Asset Management. So with that stated, in January, the monthly mark-to-the-market rate of return, February was off the chart. March was a little rocky, back about half the profits. April was stellar. May was stellar. June, July, August was flat. August was a really strange month. As you can see, August missed a lot of the move right here that occurred. We just had one little trade in the end of August. And now that we're in September and closing September out, in this choppy, sloppy market, here are the signals and the trades corresponded. Now again, this last trade, we're not out, but here is the performance that you see from this particular algo strategy. Performance summary, as we go through the list, I'll let you take a look. I will not share, this is both long and short. I will not share the settings because this is something that's more proprietary, but when people purchase the Algo 17, I supply that for them. But for this video, I will not release the settings and the criteria, just the performance, so that you can see what is the work we've done, what is the basis of this market, and how crazy have things been this year. Has this product survived? The model that we built for clients has survived. Not only that, but has provided a pretty darn good performance relative to the overall market. The history of this performance, buy and hold return is 67%. This model is 123%. The return on accounts a little bit better, but I look at return on initial capital myself versus the buy and hold. And this has to go through for the last 5 years of a 60-minute model trading in the S&P 500. We have, as you can see, over 700 trades. Anytime that most people do a backtest study, you know, a good sampling of data is in a period that the market moved up, down, sideways. And we always like to look at something with a little more than maybe 300 trades. What good is it to have a 10-year backtest study on a daily model that only took 5 trades? I mean, you can have a lot of history, but if there's no trades. So you want something that has a lot of trades, you want something that takes longs, something that takes shorts, and provides good risk-reward ratios. And so that's one of the things that this model provides for us, especially in the environment that we have right now in 2020. Will things change? Well, sure. In 2015, let's double check this performance graph one more time. So in 2015, and then there was a period here that we had a flat line from, say, 16 into 17, late 16 or early 17. The market just didn't really move. And if you think about what happened in 2016, we had the election. Market didn't really move much. So there wasn't a huge performance. There wasn't a drawdown. But the performance summary of this equity curve has done quite well for us in this environment for an automated trading system and strategy that has been able to capture shorts, ride profits, get out at highs, get out at lows. The only thing is, I guess we could look at is if we wanted to curve fit and change the settings to allow maximum bars to increase, we would see much greater profit potential, but we don't do that. This is the model, and I'm just sharing with you the razor focus. Now, many of my own clients who have taken this class, I know you're watching. I know I promised I would never give the settings out, and I mean it. And more importantly, you'll see that we should have the exact same performance, and we have a lot of very satisfied, incredibly satisfied, very happy clients using this model. All right, now let's take a look at one other. We did a summer school. Many of you, if you're watching, we did and this is called the 5 Model Summer School. I created 5 models: a SPY, SPY, I created the Qs, VXX model, I created a Russell model thinking that eventually growth, and then we have a XBI thinking with COVID-19 eventually biotech should lead us to the promised land as far as trading strategies are concerned. So if you notice here, this one has a little bit different of a performance, and it too is long the market. So a lot of the models are very similar. Some have better performances, more filtering. One in the trade room, Razor Focus, and Summer School. They're all three very similar, but they're different. They're similar in the sense that some hold longer, some have a bigger risk-reward ratio, some have a tighter stop, some trail stop, some get out, and that's one of the functions of the Algo 17. It allows clients to build their own strategy. And with the right training, and that's what we give, with the right training, you know the difference of what the three different stop or exit strategies you can employ. Trailing stop with the last conditional change, a trailing stop with our dynamic proprietary function, and then a compression stop, and how you build and optimize whether or not you should be using a compression stop, a dynamic stop of ATR combined with LCC, last conditional changes, and or just last conditional changes. It's been our research and studies that have found that last conditional changes, while are absolutely important in our work, sometimes they work better in higher time frames and not shorter time frames. Last conditional change stops, you can see that we have in just this example some green little lines. That's one trailing stop function. There's an orange right there, and then there's a yellow. Hard to see. I'll get rid of it. Let's expand the chart. In fact, let's look at the other model right now. Let's do it, and I'll expand and use the Qs. Very volatile market, I'm sure you all will agree. So here's what we would try to point out to you. Using different models. An orange is an emergency stop. It gets short. Red is your initial stop loss. Blue is the intended profit target. Boom, exits the trade. Trailing stop. If it doesn't get close to the profit, it puts in an emergency stop. It's out. Market goes short. It has the profit target. It has an emergency stop. Market went up, knocked you out, came back down, went sideways in a very choppy market. Here's a long. It got stopped out. Okay, fine. Went long, got stopped out, went short, made money, went long, trailing stop out, went short, got out right at the low, went long, little stop, went short, got lost, long, just exit the profit. How did all this trading in the month of September do? Now, this is not a back test study. This was in our client's hands who took the Razor Focus class in the beginning of August. I think it was the beginning of August we created this when we did our summer school. So again, this is a model that has been in people's hands live. And let's take a look together. All right. So green dots, for many of you TradeStation users, would know that that's a peak equity high. Green dots are peak equity highs, and we just had a new equity high on this model. So when we put this in our client's hands, this is April, you could clearly see July, and you could see here we are in the market in September. This is August 17th. This is from September 1. There's our performance. What did the market do in all of September? Well, quite frankly, if you bought at the beginning of September, you actually lost money. Because, well, from buying in September to here, that's one straight downdraft. It has been quite viciously, I would have to say, in a wild trading range with no trend in the market. So our Algo optimizer on our Qs and our summer school model has done quite well with a new equity high in a very unbelievable, let's say, unruly market environment. Even the Russell, the IWM, which coincidentally, all of the markets exited, or not all, but shall I say the Qs exited their intended profit, and so did the Russell. And this was a live trade here on this. As you can see, if you understand the way we've run this with TradeStation, red lines means it's a loser. It entered long here, got stopped out there. Blue line is a winning trade. And this Algo optimizer shares this particular model, how we built it, so that you can put it on both your strategy report, you can put it on the chart, and you can see your exact entry. So sometimes if you're not trading it, auto trading it, and you're using it maybe as an indicator saying, hey, it went long, maybe I'll join the trade a bar or two later to see maybe if there's good confirmation. Let's take a look at the performance here. All right, so for the month of, since this has been in our clients' hands, this has been an absolute outstanding trade performance as far as marked to market. From August, if they started to use this, it provided a nice profit. On September, obviously the month's not over, but it has also had a pretty decent month and rate of return as far as monthly profitability. It back tested pretty well, especially in the period of the most insane volatility of our lifetime, back in what I would call, it is our lifetime, because we've never really traded in a 249 10-day ATR environment. In March is what we reached. It was absolutely unbelievable. And even in the environment where we have now with 1%, 1.5% gaps higher open, it's been pretty crazy. So these are the models, the Algo Optimizer. These are the strategies that we built, that we've provided for our clients. For anyone that's interested in the Algo Optimizer, let me reiterate one more time. We are not selling a strategy. We are selling a program that allows you to build upon something that we provide to you, and that you can maintain, you can change, modify, and adapt when market conditions change, as well as products change. You may not want to trade any of these markets. You may want to only trade the futures. You may want to trade a system, and I'm looking at a different screen here, on Tesla, Apple, something of an individual stock, and you can build upon that using Algo 17. I hope this video helped you understand the dynamics of the program and what it's doing for investors. Thank you for watching, and I hope you found interest. If you like what you see, give a thumbs up. If you have constructive criticism, we're always open. But if it's because of the quality of the sound or maybe the visual, keep in mind, I'm a trader. I am not a TV producer. Thank you all very much.